If you think the global economy is stable, you're lying to yourself. The signs aren't subtle, they're screaming. Every major economy is drowning in debt levels we've never seen before. Not even in 2008. Governments are borrowing like addicts. Corporations are leveraging to survive, and households are pretending they're richer than they are. All of it works only as long as the illusion holds. But 2026 isn't another random year on the calendar. It's the convergence point. Interest payments are spiraling. Refinancing is becoming impossible. And the cheap money era that propped up everything is dead. That means the bills come due, and someone has to pay. History doesn't repeat perfectly, but it rhymes with brutal consistency. And the world is once again lining up the same ingredients that produced every major crash of the last century. If you're not paying attention, you're the casualty. If you are, you know exactly how bad this gets. Let's stop pretending the global economy is operating on logic. It's running on denial. Every crisis is born the same way. People convince themselves the rules don't apply this time. In 1929, it was the belief that the stock market only goes up. In 2008, it was the fantasy that housing prices could never fall. Today, the delusion is even dumber. That infinite debt can exist without consequences. To understand why, you need to zoom out and follow the mechanics, not the headlines. Not the political excuses. Not the happy talk from central banks. The mechanics are simple. Debt only works when two things remain under control: interest rates and economic growth. For the last decade, rates were artificially low, so governments borrowed with zero discipline. Corporations issued debt to buy back stock instead of investing in productivity. Consumers maxed out credit because the system rewarded it. Easy money inflated everything: stocks, housing, energy, food, even basic commodities. Then rates went up. That single shift flipped the global financial landscape upside down. Cheap money turned expensive overnight. Debt that was manageable at 2% became lethal at 6 to 8%. Trillions in loans need refinancing in 2026, and the borrowers don't have the income to service them under the new rate environment. This is the core of the coming crisis. Not a real estate bubble, but a system-wide cash flow failure. Most countries are buried under debts they can't realistically pay back. The U.S. debt is exploding past $40 trillion. Europe is fractured between countries that can't agree on fiscal policy. Japan is running a monetary experiment that only works until it doesn't. In 2026, massive portions of government debt mature and must be rolled over at higher interest rates. That means one thing. Deficits explode from big to uncontrollable. Governments will be forced into one of three moves: print money, cut spending, brutally raise taxes sharply. All three are inflationary, destabilizing, or recession-inducing. Pick your poison, none are painless, and all feed into global instability. The corporate sector is even uglier. Companies took advantage of low rates to gorge on debt. Not for innovation, not for expansion, but to boost stock prices and satisfy shareholders. Now these companies face refinancing at rates 3 to 4 times higher. In 2026, a massive wave of corporate bonds matures, one of the largest in modern history. Companies that were barely surviving at low rates will suffocate at higher ones. Expect layoffs, bankruptcies, mergers out of desperation, dividends getting slashed. Stock prices collapsing. This isn't speculation. It's arithmetic. Consumers are tapped out. Credit card debt is at record highs. Savings are near record lows. People aren't T-buying because they re-confident. They rebuying because they re-trapped in a lifestyle they can T-afford. When interest payments rise, households break fast. Defaults rise. Spending drops. The economy slows. And that slowdown hits right as governments and corporations face their own debt bills. Everyone pretends the pandemic chaos is over, but the system never returned to normal. Freight costs spike unpredictably. Shipping lanes are vulnerable to geopolitical shocks. Energy markets are unstable. Supply disruptions amplify inflation, which keeps rates high. High rates push debt burdens higher. It's a vicious feedback loop. Countries with weak currencies and high external debt will be the first to fall. Their dollar-denominated borrowing becomes impossible to service. Expect defaults, currency collapses, and hyperinflation in pockets of Africa, South America, and parts of Asia. When these economies fail, global supply chains, commodity flows, and trade routes feel the shockwaves. Because debt doesn't explode instantly, it rots from within. 2026 is the year when multiple debt maturity cycles converge. The refinancing window hits governments, corporations, and households simultaneously. Think of it as a financial tsunami, not one wave, but a stacked series of waves hitting one after another. Most economies can handle one crisis at a time, but multiple debt sectors breaking in the same year. That's where you get systemic failure. Not the stock market, not real estate, not banks. The bond market is the weak point. When investors demand higher yields to compensate for risk, borrowing becomes impossible. Interest costs devour budgets. The entire system cracks. If the bond market loses confidence, you get a liquidity freeze. And once liquidity freezes, everything else collapses behind it. They can't cut rates without reigniting inflation. They can't raise rates without crushing borrowers. They can't pause without letting inflation simmer and debt grow. They're stuck in a policy trap with no clean exit. The goal isn't to scare you. It's to break the childish illusion that infinite debt is sustainable. What's coming in 2026 is a reset forced by basic mathematics. The world will adjust, but not gently. Systems overloaded with bad debt always purge it through crisis. Some sectors will collapse. Others will mutate. New winners will emerge. But anyone pretending the next decade will look like the last one is delusional. Not the people waiting for a bailout. Not the countries pretending everything is normal. Not the companies built on borrowed money. Survivors will be those who adapt early, individuals who reduce dependency on credit, businesses that run lean instead of inflated nations that clean up fiscal policy before the storm. The storm is unavoidable. Whether you get destroyed or positioned correctly, that part is still up to you. If you think this is fear-mongering, go check the debt charts yourself. The numbers don't lie, you just haven't paid attention. 2026 isn't a prophecy. It's an unavoidable consequence of the world's financial choices. You have two options: ignore everything and hope you get lucky, or wake up and prepare before impact. If you want breakdowns like this, real explanations, not the watered-down nonsense mainstream sources feed you, then stay connected. Don't sit on the sidelines while the biggest financial shift of your lifetime unfolds. Understand it. Crack it. Position yourself. Because when the reset hits, the people who saw it coming won't panic, they'll take control. Follow along, stay sharp, and don't fall for comfortable lies. This is the moment to think, not to sleep.